Welcome to another episode. My name's Jose Najarro, and this is going to be another Chipotle episode, so let's get started. So if you guys watched the last episode, we saw that Chipotle is a strong company. We took a look at their earnings report, we took a look at information from their 10Q report, and we took information from their earnings transcript. If you took a look, you know who these two guys here. We have Solo the Bull, and we have Darth Bear. So today, like always, I'm going to use this amazing website known as Lazy FA. Lazy FA allows me to see all this information in a great graphical way. So the first thing, I want to take a look in the income. I'm going to take a look at the following: income versus net income, and I'll explain to that in a few. So let's take a look. Revenue right off the bat, we see revenue has a nice uptrend going on. Obviously, because of that, gross cost of revenue is also going up because as you would expect, right? As you're selling more revenue, you need to be doing more stuff, either having more ads or more not more ads, because cost of revenue is actually the inventory, the items needed. So if you're selling more steak bowls, you need more steak to sell those steak bowls. So that's where that cost of revenue comes from. So we can see gross profit. Gross profit is still at a nice healthy uptrend compared to 2016. We're seeing there is a nice uptrend. Like always, it's okay for you to see bumps within the way up, as long as the trend is still up there. And we can see there are bumps in the gross profit, but we can still see that there is definitely a nice uptrend going on. And for that, we're going to give a point to Bull Solo. So next, we're going to take a look at net income. So net income here, we're sitting at a nice level. Net income sitting at 91 million. Last quarter was at 88.13 million. So we can see net income has not really increased since the last quarter. But then if we take a look at previous quarters before, we can see that there is a little uptrend going on, but it's not something strong enough. And it's not a negative. So I'm not going to give any points to either or. I'm not going to give a point to Darth Bear, or I'm not going to give a point to Solo the Bull, because there's not enough information for me to determine if this is a strong uptrend going on or something that's just happening for these two quarters. Next, we're going to take a look at earnings per share. Of course, it's going to look like our net income. And again, same thing. I'm not going to give it any points. It is pretty good. It is at a good value. But overall, I can't really determine the trend that it's going on. And I can't really, from the data right here, I can't really see anything. So again, no points are going to be given out. All right, so the final thing is I want to take a look at all the incomes: gross profit, operating income, earnings before income taxes, and net income. And the reason I want to take a look at is because all of these should have similar patterns. They all should have similar patterns when you look at them. If they don't have the similar patterns, then it means something fishy is going on somewhere. So here, if we take a look, right, operating income, even though the numerical value is not the same, operating income looks the same as earnings before income. And let me go down, and earnings before income actually looks the same as net income. The numerical value is different, but they still have the same look. And that's a good thing. That means to me that there's no accounting funniness happening anywhere. But when we take a look at operating income and gross profit, in the eye, it might look different. It might look different, right? But in reality, it's not. It's just, again, a lower value. So we can see here, it peaked this quarter. It had a down peak 2 quarters ago. 4 quarters ago, it was a lower peak. And that's what we see here, right? We see a peak this quarter. It had a down 2 quarters ago, and then 4 quarters ago, it had a lower down peak. So all the things look good. The only thing this is telling me that this company is definitely spending a lot of its gross profit on operating expenses. And operating expenses can be different things. It can be just maintaining the overall restaurants, and that's okay, right? So that's okay. So overall, everything looks clean here. And for that, I'm going to give Bull Solo a point. So that's up to 2 points, I think, right now. So next, we're going to take a look at the balance sheet. And in the balance sheet, I want to take a look at 3 things. I want to take a look at asset distribution, liability distribution, and shareholder equity. So again, Lazy FA is pretty amazing at doing this. And here we can see total assets and total liabilities, shareholder equity had a little hiccup, but it's still pretty flatline. We can see total assets have grown dramatically 2 quarters ago. So 2 quarters ago, it was at 2.27 billion assets. Then it jumped down to up to $4.63 billion, and now this quarter $4.66 billion. So this doesn't mean that they just got a huge amount of assets, and the same can be said about liabilities, right? Liabilities is right now at $3.12 billion compared to 2 quarters ago being at $8.24 million. So we can see there was a huge jump in assets and liabilities in 2 quarters. But if you guys have been watching my previous episodes, that's because there is a new standard going on where they need a percent liabilities based and assets based on the leases they have. So this is we're going to see in the asset distribution. I'm more than likely this is due to real estate improvements and real estate's being added to the assets. So for me, this doesn't scare me at all. We can see overall shareholder equity, even though assets and liabilities increased, they increased at the same manner. So for those that don't know, shareholder equity is the difference between total assets and total liabilities. So this is what the company is really worth, right? If you pay off all this debt, this is what the shareholders technically own. And you definitely would like to see this going up. It is pretty flatline for me. So for that reason, I'm not gonna give a point to anywhere. So now we'll take a look at asset distribution. And here we can see where the two jumps came in. So we can see here in the big jump came from property, plants, and equipment. So again, that is their real estate leases. So here back then, 2 quarters ago, property plants was $1.38 billion, and now it's $3.76 billion. And you can see from the same time last quarter that this is because of that reason. Next, we're going to see that this company non-current debt is 25 point has jumped, and it jumped a nice amount. And this is pretty impressive. So we're going to take a look at this balance sheet really quick. Something that you guys see. Chipotle has no long-term debt. That to me is impressive. For a company like this to have no long-term debt, they don't have anything. The only two long-term debts that they have are the liabilities that they had to put from their leases. And that to me shows that this company is at a strong place. That is one of my favorite things to see. I love to see a company that has no total debt, like none whatsoever. It does have payables and current liabilities, but no long-term debt that it needs to pay off besides its leases. That's pretty good. Overall, everything else is pretty strong. And we can see this company has a huge amount of current investment as well. So for me to see this company have cash and cash equivalents being 328 million and current investments being 417 million. This company also has receivables of 49 million. It has intangible assets, which are barely anything at 21 million. That's even greater. So this company has a great asset distribution sheet. It has about $1 billion of short-term assets. So it means money that it can convert into cash pretty quickly. So for that reason, I'm going to give 1 point to Solo the Bull because of that asset distribution. Shareholder liability distribution is also pretty good. I mean, this company has really no crazy debts. It has a current debt of $161 million, but this company can easily pay it off with just its cash and cash equivalents. So to me, it doesn't really, $161 million is not much money. And for that, the liability distribution is going to also get a point for Bull Solo. This company definitely has great asset distributions and liability distributions. So now that I'm looking at this, I gave this a 35 PE ratio, but this company is actually doing pretty good. Actually, I gave it a 37. Maybe even a 40 PE ratio would actually be good for this company. So next, we're going to take a look at the cash flow. So here in the cash flow, I want to take a look at the following. I want to take a look at cash flow from operations, cash flow from financing, cash flow of operations versus cash flow from financing, and then cash flow operations versus earnings per share. So cash flow from operations, this is cash flow collected from its everyday use, from its operation, its normal operation. And for that, we can see it is at a positive. This company is collecting money. It has positive cash flow of $117 million. So a point to Bull Solo for that. So net cash flow from operations, this company is actually paying its loan down, or is paying something down. And it's not that it's not collecting debt, it's actually buying shares. And like we saw this quarter, it bought about $58 million of shares. So that's definitely good. So for that, I'm actually gonna give a point to Bull Solo, because it's actually using its money to buy more of its shares. It actually only took out a loan this quarter of $89,000. Come on, a loan of $89,000 for a business this big, this is nothing. This is like chump change for them. So definitely Bull Solo gets another point, and he's killing it. This Chipotle is killing it. I'm not gonna lie. This company, the more I take a look at it, the more this company looks like a really strong company. I'm not gonna lie, guys. I'm not gonna lie. When I first did this episode, I kind of really thought Chipotle was horrible. In my mind, I'm like, I would never, ever even think about investing in Chipotle, just because that price range seems so high. But now I'm looking at all this, and it's like, wow, I'm glad I do this. It helps me learn about the company, and it helps me see how balance sheets of other companies are. So the final thing, right, in the cash flow is I just want to take a look at earnings per share versus operating cash flow. So in theory, they're not going to match together, right? So these are not going to go identical, but they should go in the same trend, right? If this company is reporting a positive earnings per share, it should also be showing that it has a positive cash flow. Because if it has a positive earnings per share, but it's showing a negative cash flow, that means one thing. This company is over leveraged and is financing so much money that even though it is producing a positive earnings per share, it has to pay off all its cash flow to financing, or is collecting all its money through credit lines and stuff like that, which is not real money. So I definitely like to see them at least going the same path. And for that reason, Bull Solo gets another point. And so the last thing we're going to take a look at are metrics. And here the metrics I want to take a look at are current ratios, gross margins, profit margins, debt to equity ratio. So let's take a look at current ratio. So current ratio is current assets divided by current liabilities. And that right now is sitting at about 1.5. So obviously all I care about is that it has a value above 1. If it has a value above 1, it means this company has enough assets to pay off its current liabilities. But we saw this company barely has anything to really pay. So 1.5 is definitely good. So a point here to Bull Solo as well. Next, we're going to take a look at gross margins. We can see gross margins right now at 20.9. And this is pretty similar, right? You can see this uptrend happening overall. So gross margin, not that big of a gross margin. It is in an uptrend, so I'm not gonna give a point to Solo the Bull. I would give a point if there was a huge increase in gross margins. But it's good to note that Darth Bear does not get a point here because gross margin is not going down. Same thing can say with profit margins. So profit margins will actually look like our net income chart. So for that, I'm not going to give a point here. It's too little information for me to actually 2 quarters around the same profit margins. I want to see at least one more quarter to show, hey, these are definitely this is actually the norm now. So yeah, I hope you guys, that's it guys. I hope you guys enjoyed this episode as much as I did. Like I said, I came here thinking Chipotle was a pretty bad company. I came out walking and thinking a completely different manner. And this hopefully shows you guys that I'm here just to collect facts. Like that's here. I don't really care. Like I said, I thought the company was bad when I first came in, but I provided all the facts. I got all the information. And I come out with a changed opinion. So I hope you guys appreciate that. And I hope you guys are getting some value with these videos. I hope you guys enjoyed my 2 partners here, Darth Bear and Solo Bull, and myself here, the Emperor, being right here, which I should probably be close to Bull Solo today. See you next time, guys. Enjoy. I hope you guys enjoyed the video. Make sure to subscribe. Give me a thumbs up. I appreciate the support that some of you guys are giving me. I definitely appreciate it. And it makes these videos go a lot better. So 100%. Thank you guys for watching.